Wall Street analysts predicted 2026 would mark a period of stabilization for legal technology stocks. Thomson Reuters had just reported strong earnings. LexisNexis parent company, RELX, was trading near all-time highs. The legal AI sector appeared poised for measured, sustainable growth. Then Anthropic posted a set of files to GitHub. Within 72 hours, $285 billion vanished from global software and financial services stocks. Thomson Reuters lost $8.2 billion in market capitalization during a single trading session, its largest intraday decline in corporate history. LegalZoom crashed 19.2%. RELX experienced its steepest single-day drop since 1988. Jefferies analysts coined a term for the carnage, the SaaSpocalypse. The trigger was not a regulatory crackdown, not a financial scandal, not an economic recession. It was an open-source plugin priced at $20 per month. According to Bloomberg, the market reaction represented the first major AI-induced sell-off targeting an entire professional services vertical. If a collection of structured prompts and workflow configurations can erase $250 billion in value before lunch, what does that suggest about the future of professional work itself? One attorney's reaction on LinkedIn captured the mood across the profession. They said they spent 3 years in law school, passed the bar, worked 80-hour weeks as an associate, and now a chatbot can review contracts for the price of a Netflix subscription. Nobody prepared us for this. The sentiment echoed across legal forums, bar association meetings, and law firm partner retreats throughout the weeks that followed. The legal profession has long positioned itself as automation-resistant. Unlike manufacturing or retail, law requires nuanced judgment, contextual interpretation, and the irreplaceable human capacity for ethical reasoning. Or so the argument went. For decades, this assumption held. The 2010s saw legal technology focus primarily on efficiency tools, including document management, billing software, and basic search functions. These products assisted lawyers without threatening to replace them. The early 2020s marked a critical inflection point. According to the American Bar Association 2024 Technology Report, use of AI by attorneys jumped from 11% in 2023 to 30.2% in 2024. Firms began experimenting with AI for research, document drafting, and contract analysis. Still, the consensus remained that AI would augment legal work, not supplant it. Thomson Reuters acquired Casetext for $650 million in 2023. Harvey AI, a legal-specific startup, achieved an $8 billion valuation by December 2025. The legal AI market reached approximately $1.5 to $2.1 billion, with projections of $7.4 billion by 2035. Investment capital flowed freely. Optimism prevailed. Then, something shifted. The companies that had been purchasing AI infrastructure suddenly found themselves competing with their own suppliers. On January 30, 2026, Anthropic released 11 open-source plugins for its Claude Cowork platform. One targeted legal workflows specifically. The legal plugin bundled 5 commands. Review contract for clause-by-clause analysis against configurable playbooks with risk flagging. Triage NDA for rapid pre-screening. Vendor check for agreement status monitoring. Brief for contextual legal briefings. Respond for templated responses to discovery holds and data requests. The plugin integrates with Slack, Box, Ignite, Jira, and Microsoft 365. It runs locally on users' machines and operates through Anthropic's Model Context Protocol. Scott White, Anthropic's head of product for enterprise, told Axios this represents a transition for Claude, from being a helpful sort of assistant to a full collaborator. He added that you can delegate entire projects that are hyper-specific to your company and your role at that company. The market response was immediate and severe. According to Bloomberg reporting on February 3, 2026, Thomson Reuters fell from 16% to 18%, erasing $8.2 billion in value. The company derives 45% of its operating profit from legal services. RELX dropped 14%. Wolters Kluwer declined from 10% to 13%. DocuSign slid 11%. CS Disco fell 12%. The sell-off extended beyond pure legal technology. Goldman Sachs data showed its basket of United States software stocks sank 6% in its largest single-day decline since April of 2025, when tariffs induced a downturn. Salesforce, Adobe, and Service. Now each dropped approximately 7%. Indian IT outsourcing firms Infosys, TCS, and Wipro fell from 6% to 8% because their billable hours model targets precisely the workflows these plugins automate. Morgan Stanley analysts wrote that Anthropic's move was a sign of intensifying competition, and thus a potential negative for incumbent legal technology companies. Robert Ambrogi of LawNext framed it starkly. For the first time, a foundation model company is packaging a legal workflow product directly into its platform, rather than merely supplying an API to legal tech vendors. But the plugin itself is only part of the story. The true disruption lies in the pricing model. Even before the plugin launched, a pricing revolution was already reshaping legal technology economics. Traditional legal AI solutions command premium prices. Thomson Reuters. Co-counsel and LexisNexis Protégé require substantial enterprise contracts. Harvey AI serves primarily Am Law 100 firms with corresponding fee structures. The legal technology market has historically operated on the assumption that specialized tools justify specialized pricing. Anthropic's legal plugin is available to all paid Claude users. The entry-level Pro plan costs $20 per month. The Premium Max plan runs $200 per month. There is no legal-specific pricing tier, no enterprise minimums, and no lengthy procurement cycles. This pricing disparity created what analysts describe as existential uncertainty. Why would a solo practitioner or small firm pay tens of thousands annually for specialized software when a general-purpose AI handles similar tasks for the cost of a streaming subscription? According to Clio's 2025 Legal Trends report, 79% of legal professionals now use AI in some capacity, but only 40% use legal-specific solutions, a notable decline from 58% the previous year. The trend suggests professionals are already migrating toward general-purpose tools. Thomson Reuters data indicates current AI users save approximately 5 hours per week, translating to roughly $19,000 in annual value per person. The company projects this could reach 12 hours per week within 5 years, representing approximately $100,000 in billable time annually per United States attorney. Goldman Sachs research estimates 44% of legal work could theoretically be automated. When the automation tool costs less than a monthly parking space, the calculus changes dramatically. This brings us to one of the most politically charged aspects of the current transformation, the question of who benefits from professional disruption. Proponents argue that democratized access to legal AI tools could help close the justice gap. The American Bar Association Task Force on AI noted in its December 2025 Year 2 report that high subscription costs for reliable AI tools risk widening the justice gap by making advanced capabilities available only to well-resourced firms. Critics contend the disruption primarily benefits technology companies and their shareholders, while displacing human professionals. Dario Amodei, Anthropic's own CEO, has been unusually direct about the potential consequences. In a January 2026 CNBC interview, he warned that AI could cause unusually painful disruption to jobs. In his essay, The Adolescence of Technology, he suggested AI could simultaneously wipe out jobs across finance, consulting, law, and tech, denying workers the option to switch lanes. Legal professionals now face what industry observers describe as a triple squeeze. Positions are being automated. The surviving roles require new technical competencies few were trained for. And the economic value of traditional expertise is being compressed by tools priced at consumer levels. The same companies posting thought leadership about AI's transformative potential are simultaneously releasing tools that make significant portions of professional work redundant. The irony has not escaped notice. The American Bar Association's 2024 survey found 57.3% of attorneys cite accuracy as their top AI concern, followed by 56.3% for reliability and 47.2% for data privacy. Yet 53% of firms have no AI policy whatsoever. Across Reddit forums and LinkedIn posts, a consistent narrative emerges. Attorneys who spent years building specialized expertise describe watching automated systems perform in minutes what previously required hours of billable work. One mid-level associate described the experience to Bloomberg Law. "I was told, AI would help me work more efficiently. Instead, it made half my responsibilities obsolete." The partners aren't sure what to do with associates who used to handle the tasks that Claude now finishes before lunch. The transition has been particularly disorienting for professionals who followed every prescribed step toward career success. Understanding why the market reacted so dramatically requires examining what these tools actually do. Claude Cowork represents Anthropic's expansion from infrastructure provider to application layer competitor. The platform launched January 12, 2026, as what the company described as Claude Code for the rest of your work, a no-code agentic desktop tool designed for non-technical professionals. 18 days later, the plugins arrived. The legal plugin operates through Anthropic's Model Context Protocol, MCP, which enables Claude to interact with external systems while maintaining context across multi-step workflows. The system can access document repositories, communicate through Slack, interface with project management tools, and execute complex legal analyses across multiple data sources simultaneously. Richard Tromans of Artificial Lawyer called the development massive, noting, "We have been waiting years for big tech to make such a move." The plugin represents the first instance of a foundation model company packaging complete legal workflows directly into its platform, rather than simply providing API access to vertical software developers. McKinsey research suggests agentic AI systems capable of autonomous task completion could transform professional services more rapidly than previous automation waves. Unlike earlier tools that required human initiation for each discrete task, agentic systems can receive broad instructions and independently determine the sequence of actions required for completion. The distinction matters. A tool that assists with document review is helpful. A tool that independently reviews documents, flags issues, drafts responses, and schedules follow-up actions is something else entirely. Looking forward, markets projects. The legal AI software market will reach $7.4 billion by 2032, growing at 17% annually. However, these projections were calculated before foundation model companies began competing directly with their enterprise customers. The transition has been genuinely painful for many legal professionals, particularly those early in their careers. According to Bloomberg Law analysis, expectations about AI's 2024 impact significantly exceeded actual outcomes. Only 9% of firms reported increased adoption of alternative fee arrangements, versus the 39% who had predicted the shift. The gap between anticipated transformation and operational reality created confusion about how to respond. One forum post that circulated widely captured the frustration. "We were told technology would enhance our value. Now it seems like it's replacing our value. And nobody taught us how to work alongside systems that can do what we do, faster, cheaper, and without needing sleep." Many professionals feel as though the fundamental rules of their industry changed overnight. The traditional path of law school, bar passage, junior associate work, and gradual advancement toward partnership assumed certain tasks would remain human domains indefinitely. That assumption appears increasingly outdated. The widely promoted narrative that AI would simply handle tedious work while lawyers focused on high-value strategic counsel has been complicated by tools capable of both document review and strategic analysis. The distinction between automatable and irreplaceable work has proven less clear than anticipated. The picture is not entirely bleak. Historical precedent suggests technological disruption rarely eliminates entire professions overnight. Instead, it transforms them. Several analysts pushed back, calling the market reaction excessive. Joe Patrice of Above the Law wrote that after experimenting with Claude Cowork a lot, it screws up most workflows that involve more than a couple tasks, and suggested people pump the brakes. Sheena Ferrari, former legal operations leader at Fitbit, Zendesk, and Snap, noted that the plugin requires some serious technical know-how to implement. Artificial Lawyer called the stock sell-off irrational, arguing that Thomson Reuters, LexisNexis, and Wolters Kluwer remain legal data fortresses with proprietary datasets spanning decades that no foundation model can replicate. Legal research depends on verified case law, authoritative citations, and curated expert content that general-purpose AI cannot simply generate. Winston Weinberg, CEO of Harvey AI, responded to the Cowork launch by saying that Anthropic's announcement does nothing to change their strategy or their bullishness on this space. The comment suggests at least some legal AI leaders view foundation model competition as manageable rather than existential. New roles are emerging. Prompt engineering, AI governance, legal technology implementation, and hybrid practice models represent growth areas within the transformed landscape. The ABA task force concluded that AI has moved from experiment to infrastructure for the profession, implying adaptation rather than obsolescence. So, is this the end of the legal profession? Not exactly, but it marks the end of legal practice as previous generations understood it. The question is no longer whether AI will transform law. A single plugin release that erased $285 billion in market value answered that definitively. What matters now is the speed and depth of transformation, and who benefits from the disruption. The fundamental economics have shifted. When sophisticated legal analysis becomes available at consumer pricing, the value proposition of traditional legal services requires fundamental reconsideration. Firms, practitioners, and law schools face urgent choices about how to adapt. Anthropic's plugin may be primitive in its current form. Implementation challenges remain significant. Hallucination risks persist. Regulatory frameworks lag behind capability growth. Yet, the trajectory points in one direction. As one analyst observed, software companies built on "We Automate X" now face a competitor that charges consumer pricing, ships faster, and controls the interface. The legal profession has weathered previous technological shifts. It will likely weather this one. But the profession that emerges will bear limited resemblance to the one that existed before a set of open-source files crashed the stock market.